Major cryptocurrencies have fallen 50% or more from record levels, but are investors worried?
I think some people are actually seeing this as an opportunity, perhaps to buy at some cheaper levels than they were looking at a few months ago.
Why are NFTs grabbing all the attention? And can institutional crypto flows, which were at their highest ever in 2021, continue the upswing? Coming up on Word on the Blog, James Quinn, managing partner at Q9 Capital, joins us from Hong Kong to dive deep into these topics and a whole lot more. What a welcome 2022 gave crypto. But where some see chaos, others see opportunity. What is the Asia market sentiment and the driving factors? Why NFTs could be the gift that keeps on giving? And how will geopolitical shifts in this part of the world from Russia impact crypto? Welcome to Word on the Block, the series that takes a deeper dive into blockchain and all the emerging technologies that shape our world at the intersection of business, politics, and economy. It's what we cover right here on Forkast News. I'm Editor-in-Chief Angie Lau. Well, today we are in conversation with James Quinn, managing partner at Q9 Capital, that serves a lot of family offices and corporates in Asia as a digital asset private wealth manager. So I want to get some unique insights as to how Asia investors are dealing with the markets right now, what they're thinking, how they're feeling. Thanks for being here, James.
My pleasure, Angie. Thanks for having me.
I can only imagine the kind of calls you're fielding these days from your private wealth clients and family offices. What are they asking you? What are they curious about? What are they concerned about?
Although we do have a core base of private wealth and family office clients, we do cover a full sector from retail up to larger corporates. And frankly, we don't get a lot of nervous calls despite the market volatility, which you might kind of be surprised at. We sort of wondered as we saw the market kind of going sideways a bit from December and into the beginning of this year going a bit lower. Generally, they tend to be either, holding or buying, actually. Now, I think, especially for the folks who maybe haven't invested all of the capital they were sort of thinking about, they're actually kind of looking to get in. So there's sort of been, our account openings have actually increased dramatically. So I think some people are actually seeing this as an opportunity, perhaps to buy at some cheaper levels than they were looking at a few months ago.
A few months ago, we were, at all-time highs. And now there's speculation that it could potentially even hit 20 before we see a rebound. What's the sentiment that is at play here in the markets? When you come from the traditional investing world, from traditional banking, and you're now in crypto, how do you see these kind of macro events and what we're seeing in the equity markets influence what's happening in crypto?
Well, I mean, I think what people are talking right now is about the correlation. One of the things that crypto and digital assets were built for was, hey, the correlation is less. It's not correlated with traditional markets. It's a good place to invest, to diversify your portfolio. And the correlation has been going up. It's going up in particular as the market's going lower. But I think generally this year, it's sort of been going higher than historically. But I think you can think about correlation roughly through two mental frameworks, and they're both sort of always at play. One is sort of how correlated is the actual asset. Let's say gold and silver. People are like, okay, they're both jewelry. They both have some store of value function. Yeah, maybe silver's used in more industrial uses, but there's some similarities, so people can get their head around that very easily. But then there's the correlation in how assets move because of who holds them. Mm-hmm. So, to give an example, let's say, in a given suburban neighborhood, all the house values are going down. So what are the used car values going to be in that neighborhood? If everybody has to sell everything because, they're suffering, the cars and the houses themselves don't actually have any correlation in the assets, but they're sort of the same holders. Mm-hmm. So I think what we're seeing a little bit in crypto and digital assets is just institutionalization. As more people come from traditional finance and more investors come in and new to the space, they're going to be holding both digital assets, crypto, and they're going to be holding traditional equities, fixed income, whatever, all types of traditional assets. So especially when it's market off and you're getting a margin call somewhere, or you're just feeling you need to de-risk somewhere, everything's going to get hit to a little bit. So I think, over time, we should actually only see an increase in correlation. Now, that doesn't change the fundamentals. Does Bitcoin have anything in particular to do with a particular equity or the overall market? or does a different digital asset or cryptocurrency or an NFT, which I'm sure we'll talk about later, have any particular relationship to those assets? Probably that's not changing dramatically, but the holders. And so when the market's going down, you're going to see a little bit of correlation, which frankly you've seen across all assets really, within crypto and across all assets.
No, we have seen that. It's that spillover effect. We often talk about the decentralized, aspect of this world. And yet if you are the single holder, you are also the single point of, decision-making here in both, traditional markets and in crypto. But as you said, you're seeing more, it's almost counterintuitive, as people kind of leave the market, sell off, dampen prices, you seem to be getting a pickup in Asia. Why do you suppose that is?
I guess I wouldn't really say it's necessarily Asia specific to what we're seeing on our client side and people coming in. It could partially be, but we tend to have a lot of people who are newer or newish to crypto. So they've been sort of looking to increase their holdings over the last year or two. They've been becoming more confident and in the prospects of cryptocurrencies, digital assets, NFTs, the entire space as an asset class and as part of their portfolio. From an investment perspective, looking at the technology. So for them, this is an opportunity to increase. I suppose if you have most of your assets in crypto, then you're probably not looking to increase at this point, right? You're probably looking to de-risk, right? But yeah, I think the most important thing to think about is that it hasn't necessarily been scaring people away. Our client onboards have actually, like I said, picked up dramatically, which I think is quite interesting. Yeah, there's maybe some specific things going on here in Asia. NFTs are very popular, and that's kept people interested. A lot of the gaming networks out here have been really instrumental in pushing NFTs along. And those marketplaces working, somewhat separately, but they haven't been immune. I mean, the biggest sort of, let's say it's Sand has gone lower and Axie has gone lower as the rest of the crypto market has gone lower as well. So, but I would say it's more about our client set being the newer investors, which we call that just like investors, people who are looking to basically commit capital into the space as opposed to sort of being full-time traders who are doing it for their job or their work.
We saw a lot of institutional pickup in crypto investments in 2021. How do you view this continuing in 2022? Is institutional adoption cooling, or is it just getting started?
So VCs had their biggest, investment year in 2021. I think it was around $30 billion. That was bigger than all the other years combined. So there's a lot of capital sort of waiting to go into the space and further invest. I mean, a lot of that was raised, which I think is interesting about maybe compared to what people were predicting a few years ago. That was raised by native crypto firms, right, who are actually been in the space a while, and they've become really big, and they themselves have become, quote unquote, more institutional as opposed to sort of the traditional finance names really taking a front page or the lead in a lot of crypto and digital assets businesses. But to me, that means there's more capital to be invested. There's been, definitely some sellers in January. There has to be, obviously, or the market wouldn't be going lower. But there's a lot of money on the sidelines, waiting to be invested into the businesses themselves, which raise capital, but also these businesses are buying other businesses. Yep. You're going to see a lot of consolidation. You're going to see a lot of different corporate actions around that money coming in as well. So I think it's going to be more about building and using that capital to sort of grow businesses. But there's definitely going to still be interest in coins and different other types of, probably a lot of yield opportunities as well. Opportunities to make money, sort of more steady income as relates to cryptocurrency and digital assets.
So when you take a look at this space and as you advise your clients and as you take a look at the opportunities in the market, what are they?
I mean, right now, our clients are really just interested in creating a foothold, right? And so they're really sticking with the top coins as a start, right? So there's very few folks that don't have some position in Bitcoin, ETH, or some other top 5 names as part of their overall portfolio, right? And then what you tend to see is a bit of a divergence into things that they're interested in or they want to follow. So like what we've talked about a lot is sort of sticking with some, tried and true type of investments that people have been with a lot. And then also, if you're interested in NFTs, if you're interested in digital art or something, and you want to follow this, then you kind of invest in that or look at that type of thing. You know, it's not really an advice or recommendation. It's actually, I'm just reporting to you what people are already doing. Right.
I want to hear more about that coming up next.
And I think that actually makes sense, right? I mean, you cannot be an expert in everything. So, you know, to try to leap on the next coin, you know, sure, that works if the market's kind of up only. But, you know, when people are sort of actually looking at pricing now, well, you know, you go in and sort of the main things that have been around for a while, and then you focus on some things that make sense to you. Some other people are looking at some of the new layer ones and thinking which of these layer ones might be interesting competitor to, say, an ETH or really complementary, frankly. I mean, it doesn't mean that the world has to exist in what we've seen before. But don't forget that as more and more people come into digital assets, as more and more people come into crypto, the main coins will be the beneficiary of that. You know, you'll see just the comfort level of people holding a wallet and dealing with that is what we've seen, you know, and it's been really helpful. And I think it just adoption, really.
Bitcoin's only the beginning. From crypto to NFTs coming up next. Yeah. What's the risk appetite of diving into the metaverse? And how do family offices in Hong Kong and Asia see non-fungible tokens when Word on the Block returns?
After the break, can NFTs be the gateway to understand digital assets?
It's tangible. It's something you can play or a token you can move around. It's hard to get your head around Bitcoin and ETH and crypto, which doesn't have any kind of physical representation, so to speak.
And later, are regulators beginning to understand the economic might of the metaverse when Word on the Block returns?
Forkast News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. We go to where the action is, from Asia to the world. Forkast is the most reliable source of intellectual discourse and insight that informs, educates, and bridges the gap between the blockchain industry and the mainstream. The future is being built, and Forkast has it covered. This is Forkast News.
We are back with James Quinn, Managing Director of Q9 Capital in Hong Kong. Okay, I mean, you said it. A lot of your investors, it's kind of like the gateway crypto. It starts with Bitcoin, then it's ETH, and then it's a bunch of the layer one top performing altcoins. And now it's NFTs. A lot of people in crypto are starting to see NFTs as a way to diversify your holdings, as you've said. How are your clients here viewing this? What are you hearing on the ground there?
Well, an NFT is such a broad category. Mm-hmm. It means something different to everybody depending on their, viewpoint. Like we have a shop, a hub right here in Hong Kong in Central, and it offers digital art, NFTs. Okay. So we have a lot of conversations with people coming into our hub, and they want to talk about crypto in general, which we do, and we do education there as well. But, they may look at the digital art and think, oh, that's what an NFT is to me. But at the end of the day, there's the technology part, but you're still investing in art, right? You're still investing, when you're looking at the gaming tokens, that's really a completely different purpose for NFT, but an interesting one nonetheless. I mean, the non-fungible part is the important part. You're buying a unique asset as opposed to a currency. A Bitcoin is a Bitcoin, but each NFT is unique in itself. So I think people are thinking about diversification of these from the standpoint that how they get some kind of diversification for any alternative assets that, if I'm investing in art directly, for example, well, that, might not be very well correlated with my equity portfolio, except for what we talked about in the beginning. Yeah. If everything's going down, everything's going down. Yeah. But it allows so many more people to get into the space. I think one of the most interesting things that we're seeing is people thinking about financial innovation mm-hmm. around NFTs, right? You can get paid a royalty, as part of being an early owner or an airdrop to a given NFT. Or here's a kind of a famous one that, in the pre-NFT days, I don't know if you remember this David Bowie bonds more than 20 years ago.
Right. I do remember. Okay, wait.
That was considered like
I remember reading about it.
Yes.
But yes, that's right.
Well, you can do that with a smart contract now in 5 minutes.
Yeah.
Right. And then you can, okay, here's, you're going to get this cut of the artist's royalty going forward, or the artist gets a cut of his own painting in perpetuity, for example, right? Or his own digital artwork in perpetuity. And then on the gaming side, this pay to play thing. So you've got people just sort of interested in the space and buying it. And I have to be honest, I mean, there's definitely still a lot of speculation around that. You've seen some of these, prices go up like crazy on different marketplaces. So for sure, there are people just interested in it from a pure speculative standpoint. But they're starting to discover the innovation around that and the repackaging and the financial innovation that's possible with NFTs, basically with crypto and digital assets in general, but NFTs because of the unique pieces and how they can frame people's portfolios.
No, it's absolutely true. I mean, the appetite and the excitement. Forkast had a holiday party, and we featured NFTs. A lot of people in the industry came to the party in Hong Kong. This was before Omicron, of course, and everything started slowing down again. But it was just really exciting to have so much interest in the NFT space that it was starting to migrate into the physical space as well. That there were physical galleries that were popping up that wanted to display NFTs from, the digital and metaverse realms to the physical realm. And I think Hong Kong, home of Art Basel Hong Kong, and so much interest in art and wealth, and there's just this really interesting intersection of interest in Hong Kong when it comes to NFTs. Do you think that the kind of interest that you're seeing from a financial point of view is also cultivating something unique in Asia?
Okay, I'm going to go back a little bit to the sort of broad part around NFTs. So first of all, here's something that I would guess is not unique to Asia, but it's important for NFTs. And that's the fact that they're tangible. You mentioned people looking at digital art. That gets a lot of people interested in the space, or gaming. It's tangible. It's something you can play, or a token you can move around. It's hard to get your head around Bitcoin and ETH and crypto, which doesn't have any kind of physical representation, so to speak. It's just numbers, but you own a piece of something that you can do something with through NFT land. And that's we think of it a little bit like a gateway into crypto and digital assets community. But I think as regards to specifically Asia, it depends on the types of NFTs you're talking about. But first of all, Asia is very comfortable in the metaverse. Always had high sort of online penetration. I think Korea was, one of the leading countries in the world originally when Wi-Fi started, and they're still one of the top gamers. In China, actually, NFTs still remain very popular. I know they're trying to promote their internal network and getting NFTs on that, so people are really looking at that as well. But I think it's just the metaverse. NFTs are very comfortable in the metaverse. That's sort of where they're designed to operate. You can kind of imagine this visually digital world where, you have your digital artwork, you're playing a game, you're all existing in that, you're socializing with your friends in the metaverse. And NFTs are really the power for that type of thing. And Asia's always been very comfortable in that. Yes, you have some certain things like, the wealth sector might be interested in digital art, and other folks might be interested in gaming. I mean, Philippines is one of, the number one place driving Axie gaming, for example, right? And that's, a big part of NFTs as well.
Well, I mean, you said it, Samsung, right? South Korea leading the charge in crypto adoption among large corporations. You have it announcing its NFT platform for smart TVs, its partnership with Cardano-based climate solution, Veratree. Do you think that Samsung, these corporate moves into NFTs, into crypto, will inspire other industry giants to follow suit? And as you view this kind of landscape, do you think that investors are going to start seeing these opportunities to invest in startups, in VCs, in platforms, et cetera, beyond even just Bitcoin? Curious about that.
I mean, already are.
Gotcha.
Already are seeing this. Corporates are definitely looking at the space. Investors have been investing into platforms that really don't have much to, in particular to do with, say, Bitcoin or even sort of the top crypto. They're really, let's say, NFT specific, but it's about more than NFT. I think what you're feeling is that these corporates are finding a niche. For Samsung, that's a pretty obvious one, right? In terms of displaying NFTs and backing that type of thing. But I think there's something for everybody in digital assets. And what you're seeing is, the technology itself and how it can power sort of the rest of the assets globally. So I would expect to see a lot more of that, if not this year and over the next few years.
All right, James, hang tight. When we come back, institutional crypto funds attracted record inflows of $9.3 billion US dollars in 2021. Will the trend continue throughout 2022? James, I want to hear your thought. Rest of you stay with us, especially as the regulators are starting to crowd into the space when we come back.
On the other side, will we see record inflows into digital assets yet again in 2022? Stay with us.
Forkast News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. The future is being built, and Forkast has it covered. This is Forkast News.
All right, I said the R word before we went to break, James. Regulators and regulations. A lot of people are seeing 2022 as the year where the regulators are starting to intensify and get really serious. We started off the year with Pakistan and Russia now, central bank, saying that it wants to ban crypto activities. So as investors ramp up interest, you've got the regulators clamping down. How do you see this dynamic playing out in 2022?
I think it's too big to ignore. Most of the regulators who haven't been saying much, and pretty much all of them have been saying something, are going to have to speak up. I think generally, though, crypto has gotten to a point where it would much rather hear from regulators and see clear regulation. So I think really what the market is actually dealing with is just, what's the messaging? Mm-hmm. Are you saying, that we can operate, and how can we operate? So if a regulator came out with a clear framework, even if that framework meant, it was much more restrictive than people have been operating, and generally I think that would be welcomed. When you think about all the institutional money who still at this point is looking for a way in that's, regulatory compliant, but also just protects them from the unknown of how regulation would change. Once that becomes clear, there's a lot more money behind it. It goes, okay, we know what this is going to be, so we can invest and have an outlook that's longer than 6 months or a year. But I think that basically the space is pro-regulation at this point. Mm-hmm. There's very little quote unquote regulatory arbitrage left, I think, as a business model.
Yep.
The largest crypto firms are doing whatever they can to get regulated. And if anything, they're going to the regulators and saying, hey, just tell us what to do. You give me a clear framework, we're going to operate in it. So, banning is a different story. I guess technically you could consider that a form of regulation. But it's a decentralized world. It's pretty hard for one type of, for one location to say, we're going to ban this. And, maybe that works in that location. Yeah. But that doesn't seem to hurt the asset class. I mean, you saw the movement of miners in China, last year, over to the US and to different locations. And so I think that's sort of what we're dealing with. The technology is just too great to ignore. And, if I'm a regulator, I'm thinking about a way to have my cake and eat it too, protect everybody, but, get as much of that innovation into my location as possible.
Well, that's South Korea's play for sure. They want to own the metaverse. It's a serious national economic goal, one of many. But, more widely, if you take a look at institutional cryptocurrency funds, it did attract record inflows. We're close to $10 billion in inflows in 2021, up from 6.8 in 2020, the year before. And according to data by Quinn shares, we saw a total of 37 investment products launched in 2021. That's up from 24 in 2020. Your prediction for this year, where do you see this going? The number of investment products, what kind will we be seeing? And just the increased cadence of investments into the space?
Hard to say. I would imagine, barring, something, complete market collapse or something, if you will, that you'll continue to see at least the same amount of inflows as last year, or something similar. I know it was a big increase on the year before, but there's money waiting to get in. The more clarity they can get, I think we're going to see a lot more of that. I assume, the number of products coming out is only held back by, what is approved. There are so many folks out there looking to list new products and get, more investment vehicles and opportunities for people, both of their, let's say, traditional brokerage or traditional relationships. And, from the pure crypto side, there's going to be a ton of innovation around that. So I would expect more money wants to come in. How much of that is able to come in sort of depends a little bit on the regulation and how quickly things get approved as well in terms of going out. But like I said at the beginning of our conversation, most of what we see from clients is, let's put a little bit more of money here to work and get some more opportunity to buy this, at these current prices.
And so what excites you about this space this year in Hong Kong, in this region, in Asia?
I mean, I mentioned before, we're excited about the financial innovation. The amount of new products coming out, we think, is really interesting. We're coming out with a lot of new products on our platform. The rest of the space is coming out with really interesting things around the opportunities for people to earn good yields, good returns on their investments, diversify across, different, tokens in different parts of the metaverse, different parts of digital assets and crypto. And just sort of the different innovations that you haven't even thought of yet. That's one of the most exciting parts for me, even though I'm technically a crypto insider. Even I have trouble following all the latest things that are going on. I have a day job too. And so I think that's like what we're trying to deliver to our investors. Like, hey, you come into the platform and you have an opportunity to sort of keep up with all this new innovation, which is really exciting, right? But I think it's just also the amount of new investors are coming in. Very few people are still saying, oh, this is just, complete garbage and it's never going anywhere. I'm not going to do anything. Most people are like, I kind of recognize this technology is interesting. Yeah. Mm-hmm. I want to do something. Or at the very least, what if I'm wrong? So I need some type of investment. That's sort of a Bayesian approach. There's a probability I'm wrong. I should have something on just in case. I had a client say he was investing for FOMO. I said, oh, like classic FOMO? Because this was actually the market was kind of going sideways at the time. Right. I said, no. He's like, it's sort of long-term FOMO. He's like, my kids gave me grief because I didn't buy an apartment in central London and like in the 80s when that have done really well. And so they're like, Dad, don't miss Bitcoin too. So basically you just have a lot of people thinking, you know what, this could actually turn out to be something interesting. And I'm thinking out 5 years out, 10 years out, 20 years out, because the technology could be so revolutionary. I want to be part of it. Right. So you just have a lot of new people coming into the space and they're all somewhere different. But the exciting part about the financial innovation is there's sort of something for everyone, which I think is great.
Including those kids who will be very glad, I suspect, some point in the future that Dad listened. James, so fascinating listening to all of these insights. And thanks for this conversation. It was a pleasure.
It was my pleasure, Angie. Thanks.
That was James Quinn, managing partner at Q9 Capital, joining us on Word on the Blog. And thank you, everyone, for joining us on this latest episode. I'm Angie Lau, editor-in-chief of Forkast. Until the next time.